Hi Trader, Tina here once again from ShortMeTina.com with my daily recap. I got a lot of things to do, so I'm going to try to go through these charts really quickly. If you want more color in short to watch any video I've done within the past, I want to say 2 to 3 weeks, it should fill you in rather nicely. So if this is your very first time, let me welcome you. If this is your very first time tuning into a ShortMeTina video, I'd like to say welcome. Do us a solid in the comment section. Say hello, drop us your name. Again, I generally say hi back. If you are returning, I want to say welcome back. Also, do us a solid, get involved, get engaged, drop us a comment in the comment section. So let's start it off as usual with the recap of the overall market. Let's kick it off with the SPY, the S&P 500. Right now, what you're looking at is a daily chart dating back to around 2017. So you're looking at data approaching about 2 years. We were up nicely on the day. I think we're up a little bit, about 1.2%. On talks, I believe that China was delaying, or they weren't going to retaliate on the new tariffs that President Trump just issued. I believe that that was why we saw this little bounce today in the overall markets. But for me, again, if you've listened to some of the videos or any of the videos I've done for the past couple of weeks, you know for me, I'm not really... Obviously, I'm going to pay attention because, well, one, I'm a stock trader, and two, I do run a newsletter service, so it is my job in many respects to pay attention to the market. But when I say I'm not paying attention, meaning I'm not going to do anything with the slight gyrations that has been going on in the market, especially if the price remains within this range that I've identified. And again, this range was established after we had that 1 or 2 day sell-off after Fed Jay Powell issued rate cuts, right? So once the market, for me, settled, it established a bottom, it established a top. For me, it formed a range, and it's been trading within that range, honestly, for about an entire month. So you have 4 weeks of data where we've had a lot of political talk, right? A lot of political talk, tariffs on the table, tariffs are off. This back and forth nonsense that allows the markets to be up, the down particular, or the markets in general, to be up 2 to 3% one day, down 2 to 3% the other day. Case in point, we're up about 1.2% on the day, because of something to do with trade talk. So as opposed to getting myself all worked up and, sort of like whipsawed out in and out of my positions, right? Everyone should know that I'm short the market right now. And I've said to myself, I will not engage, or I will not do anything with my short position until certain levels are breached or met, right? And so I've highlighted this range, 281.72, the lower end 294.15, because that's the range the market established after this pullback here. So we went as high as we closed at 292.58, although we're up 1% on the day, a little over 1%, but we are still within the range, right? 2 days ago, we had a bit of a sell-off. The low was around 286.03, the high was 289.95. Nothing to be done. Why? Because we remained within the range. So I'm going to zoom in here so you can get a real clear picture of this, right? So look what's going on right now, right? Today we went as high as 293.16, getting quite close to that upper end of the range before pulling back a little. The last 2 days we've had a nice rally, but once again, we're still within this 281.72 to 294.15 range. Now, tomorrow is Friday, and after that, obviously, we're going to have an extended weekend. I believe the markets are closed on Monday. So perhaps tomorrow might be the day that we rally and we actually get above that 294.15 level. Or, like history is a dictator, we might have a bit of a sell-off tomorrow because we're reaching the upper end of that range. And so that's really what I'm paying attention to with the SPY. Not really doing anything if we breach 294.15 on volume. And I should note here that the last 2 up days have been on below average volume, right? The selling days, however, have been above average volume, sometimes almost double the average volume. So for me, at least within the past 4 weeks, it seems as though there's more selling than there is buying. Although again, we've been up nicely for the past 2 days or so, to the tune of maybe about 3%. So a little lengthy. And I listen. This is not really biased in the sense, not because I'm short, because trust and believe I can flip long at any moment. And in many respects, I do hold long positions, but with the SPY, and again, I just implore you, right? Do not get yourself all worked up. It's a range. In fact, if you want to trade that range, I think it has worked or will work. Buy the bottom end of that range, sell the top end of that range. Had you have done that for the past 4 weeks, you would be sitting on a decent profit, right? Not paying attention to what's going on in the news, but just really focusing on price and volume. And that's sort of the backbone of what I do, and the backbone of what I teach, and the backbone of how I trade, right? Not getting yourself too caught up with the news, because it can always lead you astray. Really kind of like focusing on price as much as possible. All right, what else? All right, IWM up nicely as well on the day. I see a quote here of 149.11. We're up north of 2% on the day. Great, but similar to the SPY, right? I'm not going to react until the IWM, or the markets, breaches a certain level. So with the IWM, there's the bottom end of that range, which is this red line that clocks in around 144 to 145. The upper end, that's around 160. You can see, again, it's a daily chart dating back to, it goes back to 2016, but let's just start from 2017 of September. So a 2-year chart. In 2 years, for the most part, the IWM has only violated this range, or this channel, twice, right? And I've highlighted them. Overshoot here, we can say undershoot or overshoot there. So for me, those are some solid levels that you can actually play, right? You don't have to, you don't have to necessarily say, well, are we about to approach a bear market, bull market? Yeah, these are good talking points, but if you want to make money, just focus on the chart. Focus on the patterns that are developing. And for the past 2 years, the IWM has signaled to me, hence why you see these arrows, has signaled to me that it has established a clear floor, and that floor is 144 to 145. If you zoom in, right, let's look at price action from around May of 2019 to about September. 4 months, right? We retested that 144, 145 level on like at least 5 or 6 occasions. Granted, it's only highlighted twice here with the arrows, but I like to just group and lump them together, right? So with this arrow on May 30th, I believe, no, May 31st and June 3rd, right? We got very close to that 144, 145 level. What happened? We bounced, right? We bounced up against resistance of around 160 for a few trading days. We pulled back. Most recently, for the past 5 or so trading days, we retested or got close to that 144, 145 level. And as opposed to panicking, if you had bought that, right, you would get the bounce. Even for the last 2 to 3 trading days, right? Today is Thursday, so on Tuesday, I believe we have that pullback right here. The following day, which was yesterday, we went as low as 144.25. Yes, it perhaps looked like the market was going to cave, but had you have just bought that and managed your risk, boom, you would have gotten that pop for about 3%. Again, completely not paying attention to what's going on in the news, focusing on the price and the charts. And so that's what I pay attention to. So sitting here at 149.11, that's great. And yes, I did buy that 144 bottom, and I got that bounce, right? I wish I had bought more, but better some than nothing. So let's see what the market has entailed for us heading into tomorrow. What else? All right, and let's briefly talk about gold. I spoke, I believe, on Monday, followed up on Tuesday, regarding different ways in which you can hedge your portfolio if you're long, to protect against any sort of market hiccups or extreme decline. And one of those commodities that I highlighted, I believe, was gold along with silver. But let's pay attention to gold here, right? I said that I liked gold. However, I thought it was a little too rich for my blood. Not necessarily because 144 is too expensive, but because looking at the chart, not paying attention to everyone on the news saying buy gold, buy gold, buy gold. And I'm not saying that that's a bad strategy, but paying attention to the chart, you'll realize that gold is running up against about 6-year resistance, right? That resistance level clocks in at, let's say, 142 to around 144. So we ran into resistance overshot it a little bit. Now we're pulling back. We closed at 144.12. All right. So I just say that to say, I'm not saying not to buy gold. If you want to buy gold, buy gold. I'm just saying that usually if you pay attention to the charts and price and volume, the market sometimes, not all the time, sometimes it'll dictate to you when you should get into a stock or a commodity and when you should get out. So for gold and for me, right now it's a little bit too rich at this point. So yeah, that's it on gold. What else? All right, and then we have a ticker SY daily chart dating back to around, it seems like when the stock IPO'd in May of 2019. It's off about 33% on the day. I see a quote here of 1104. It's up about 3% in after hours. I see a quote there of around 1145. But even so, stock is down still considerably on the day. Look at this candle here. Broke through that support level of around $12 to $13 and sits here at 1104. All that selling came on above average volume. So like I've indicated, any stock that sheds 30-40% in one day, that's a huge move. For me, technically the chart is broken and you need to give it some time to actually repair itself, and for some more for the bears to get out the stock, and for those brave bulls to actually step in and to carry the stock up. So definitely for ticker SY, I'd stay away. Shameless plug here. I do have a video to anyone that signed up to my emailing list, essentially showing you how to tell when the bears have effectively left your stock. I think there are telltale signs out there to show you that your stock is ready to go up. So if you're a long ticker SY, I think it's a video that you should actually watch. So be sure to sign up at ShortMeTina.com. What else? All right, and then we have Disney up marginally on the day. I see a quote here of 137.84. Just want to update some folks on my Disney position. Yes, I am still long, but the markets, like I've said, it's a very sort of dynamic entity, right? Every single day, things change. Within weeks, a stock can potentially have a different outlook. So I'm not necessarily saying that I am bearish on Disney. However, I do believe the stock perhaps should be acting a little bit more bullish than it is right now. So I'm going to continue to monitor. One of the things obviously that I'm paying attention to would be this established low of around 130. If we ever breach that, more than likely I could see us taking a trip back down and potentially filling this gap here of around 117 to 118. Even at that point, I wouldn't necessarily say that the stock is broken, just a pause, in my opinion, to what I believe should be a resumption, quote unquote, of the uptrend. Right. So that's my take on Disney. Still long, still bullish, but gotta monitor, paying attention to that 130 level. What else? All right, and same thing with Zynga. Again, still long, still see that year-end target of around $8. Obviously, the stock needs to do some things for me to really believe that that is a possibility in the near future versus the distant future. So nice move for the past few days. We're kind of hanging around that one support now resistance level of, let's give it a range, $5.80 to around $6. Sitting here at $5.80, considering what's going on in the overall markets, is not entirely bad. However, for me, for this to look the strongest, I would like to see it actually get back within this range. So I would like to see it actually get above 6 and for 6 to be the floor. Hanging out here around 580 isn't necessarily bad. I don't want to say that, but for me, it would look the strongest if the bulls can actually come in right now and drive this up to around $6 and have that serve as the low. If we can get to 6 within the next few trading weeks, more than likely I can see this hitting 8 if the bull market starts or resumes. What else? All right, so let's wrap it up and round it out with ticker TLYS. Right now, what you're looking at is a daily chart. I want to focus in on price action starting around January of 2019. So at the beginning of the year, huge congrats to the bulls. The stock is up about 25% on the day. I see a quote here of $10.89. Again, all this buying came on above average volume. You can see right here, stock went as high as 1108, ran smack dead into resistance. one support, now resistance of around $11. So closing here at 1089, we're not too far from that resistance level. And for me, for this stock to look the strongest, if you're long or you're looking to get long, you really wanted to get above and sustain a break above 11 heading into tomorrow, or perhaps even next week. If we cannot get above that $11 area, more than likely you'll see further decline. But if we can actually get above 11 with continued volume, I would not be surprised to see this sitting at around 12 to 12.50 in the shorter term. And do take note that there's a gap here of around $14.40 to be filled. So if we can get above 11 with volume hold and continued bullish price action, then 14 might not necessarily be out of the cards for ticker TLYS. So that's it. Let's cap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of this video, I'd like for you to do three things for me. One, comment in the comment section. What do you think about the overall markets? Gold, did you buy gold? Are you short the market? Are you thinking of going long the market? What about ticker SY, Disney, Zynga, ticker TLYS? Are you in any of these trades? Again, comment in the comment section. That's the first thing. Secondly, I do videos Monday through Friday. If you want to be notified every time I upload a video, make sure you are subscribed to our YouTube channel at ShortMeTina. And lastly, my friend, I've been trading for well over 15 years. If you think you can learn anything from me, and again, I do share things with my email subscribers that I do not make public. So if you think you can learn anything from me, then head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening. And as always, thank you for listening.